And welcome to the Hot BizFluent podcast, where we get all up in your business. So let's talk. Today's guests are brought to you by Crush City Realty Group, your premier Houston real estate experts, and luxury real estate agent Alyssa Emmons, where everything she touches turns to sold. And finally, Kovo Capital, fast, flexible financing for all of your commercial lending needs. This podcast is for informational purposes only. The views expressed in this podcast by guests may not be those of the BizFluent podcast. And don't forget to stay to the end to find out how to get some of our amazing merch. Now, let's get down to business. I want to introduce our host with the most, JP Byers.
Hey, everybody. So here we are. It's another day. As you can see from that intro, where all three of us are on screen, it's amateur hour, apparently. So,
but I made it without any. I made it without any errors. I just want to say that out there.
Guys, trust us. It's episode 5. Like, we're gonna get this right one of these days. I mean, we've only got another 150 episodes in us at minimum. So, as you guys know, everybody knows Alyssa Emmons, Miss Alyssa, and then we got Josh, who's just Josh. Yeah, it's Josh. It's Josh.
What's up?
So today, dude, we actually have your business partner,
my brother from another mother, and my work wife.
Yeah. And the thing that's, we've talked about it in previous podcasts and such. So you came from the banking background to begin with, but you were dealing with big banks. Not that we're going to call those banks out. I mean, it's not like their first name sounds like L's or the last name Argo, but you came from big banking, and then you linked up with Mike, and then next thing you know, boom, you guys got this gig started. And Mike is out of Las Vegas, but again, just like you, he lends all over the country, and so he is not limited to where he goes. And we talk a lot about it, but I think it'd be really interesting from a business standpoint to hear how he started things, how this ball got rolling. And so, without further ado, I mean, let's go ahead and bring the man on. Mike Hernandez. How are you doing, man?
Doing good, man. Yeah, I'm doing good.
What's up, Mike?
Thank you guys for having on. What's up?
We need like a
make it more exciting.
Bring him in.
Y'all ruined it. We got to re-record. Y'all just ruined the podcast.
There you go. Coming from Las Vegas, I need a big intro, from Vegas.
Absolutely. Yeah, that house that you have in the background is a little too traditional for Vegas. Let's be honest.
Been working on my this way piano skills. I don't know which way it's going on the screen, but no, I appreciate you guys having me on.
What you play as a song, Mike?
Not today. You don't want me to do that today.
So man, I mean, to be 100% honest, dude, like I said, we get to talk about y'all's lending practices a lot because between Wendy Gormley, who was on last week, and y'all are my primary go-to. Even when it comes to dealing with some of my really good friends with agility and stuff like that, I usually refer people to y'all because it's easier just to hit a couple people. And so we talk about how y'all work on things. We talk about finding the proper lender and the reason why y'all are better and how y'all can prep a client to actually be ready to talk to a bank versus somebody trying to fumble around, hoping they find the right bank like they're throwing darts. So all that stuff is super awesome. And I'd be happy to get into it. But before we do that, let's talk about how you started this model. I mean, because this is different. This is not something you run across all the time. Can we go find other brokers like y'all? Yeah, but y'all are to the point where y'all don't even really like calling yourselves brokers anymore because it's so much more than just lending that y'all deal with.
Yeah, definitely. Well, again, appreciate you all having me on. I think that, like Josh, my background is in banking. I spent 14, 15 years at a big bank, and really, traditional banking has this box of guidelines. And so it takes, a certain business or individual to qualify for those things. And what I've come to realize is, what happens to those customers that don't fit that box? Where do they go? And I realized in my career that we were, recommending other institutions, alternative lenders, things of that nature. And we got to build a good relationship with those institutions. And so, kind of working in the corporate grind, I was like just tired of it. I wanted to help the general public, and I realized that I could only help in a small space. So I created a business model out of that, and that's getting funding in all different ways for people. And so it was kind of accidental to how we developed Kovo Capital. It wasn't intentional. It was just like, hey, I'm bringing this bank here, structuring a deal this way, and kind of, build a model out of that. So here we are, a few years later. Met Josh during that journey. It's been great working with Josh, and like he said, it's definitely my work wife. We're on the phone constantly, every day, a few times a day. So, nevertheless, I don't know what else you guys want to cover on that, but
I mean, it's a good
You
way
can
to
say
start.
more awesome things about me. That would be cool.
And so I'd hate to say that I don't like throwing people under the bus, but I honestly think that it's a good practice, especially for our audience, to get a better understanding of what it is that you guys go through. And this really is, honestly, for anybody that's watching this, I promise you, this is 100% improv. Under no circumstances anybody even done this, but I can tell she
I'm
can
getting
already
scared now.
she can already feel it. So, Alyssa, you've started it, like we've talked about. You've started a number of businesses, but you and your husband have always self-funded your businesses.
Mm-hmm.
You want to start a new business, and you and I have discussed briefly, but so let's just say whatever it winds up being, any type of business. You've never gone to a bank for money, so I don't want it to be role play, because there is truly some things that you and your husband have discussed doing together, that you're going to need more than just your own personal funding. Sorry, I've got a dog in the background. And so talk to Mike. What kind of questions do you have for him, and what kind of questions, Mike, would you have for her as a brand new client?
Yeah, I mean, my first question would be, if I'm coming in to chat with y'all, like, what is it that you need from me? What do I need to provide you with to be able to start a relationship?
I think that's a really good question, because when it comes to business lending itself, it's like, it could be complicated if you make it complicated, but also sometimes people don't know what they don't know, and the thing of the past has been, you go to your bank, you ask for a business loan, they stamp it right then and there, and then you're off, right? And in previous years, that's changed a lot, right? Ever since the '08 crisis, banks have got a little bit more strict on some of their criteria and things of that nature, right? And how can we equip the everyday customer to kind of go in and ask for a business loan? Number one, as a consultant, we got to understand where you're at, within your own financial picture, and your business. Is this something you have experience in? If not, can we bring in another partner, right? And if you do, can we create a good business plan? Can we, have solid projections to see what that looks like? How do we get under the hood to really understand where you're at and where a lender wants you to be? And so I think that provides a lot of value, because we have met businesses in all types of financial backgrounds, meaning there's some businesses who just have a CPA, and if we ask for information, they have it ready, available, right? We also have that customer that, they have some of their financials ready, and sometimes it could be a struggle to get some of your financials, right? And we have those that just are really from the ground up, need a lot of help getting that together. Where do I go with that, right? To your question, right? It's for us to really understand and kind of dissect that a little bit more on what that would look like. Typically, from a lending perspective, we look at 3 different categories, right? We look at credit, cash flow, and collateral. and
Oh wait,
experience.
we
and
got 4
character.
C's now, Mike. We got 4 C's. I think you should start getting that in there because that's a
Yes.
good one, especially in this
Yes.
conversation.
Yes. So
4 C's.
traditionally, when you look at lending itself, all banks are going to measure you pretty much the same way, and it's credit, cash flow, and collateral. We've added our own at Kovo Capital, and that's character, right? So it's our 4 C's. Okay. So anytime that we're looking at a deal, the 4 C's are top priority for us to understand what you're looking for, right? If you're an existing business, are you making money, right? That's the cash flow part of it, right? What does your credit look like from a borrower's perspective, right? And if there's multiple owners, what does their credit look like, right? And what is the collateral that could be referenced, whether that's the existing business collateral, personal collateral, or the collateral that you're looking to acquire. So all banks measure that the same way. We added character because really I think that's an important factor when it comes to lending, right? If we're asking for documentation and we're not really getting it from a certain customer, or you're kind of late to respond, whether it's us or another bank, right? They're going to take your character into perspective. Number one, you want to make sure you get the time of day with that lender, right? You want to make sure that lender or that bank is responsive to you. And even if you don't have everything like set in stone and it's not pretty, they're going to be willing to work with you to get to that next step. So we've had borrowers, or maybe their financials are not pretty, but they have great character. They're responsive. They're willing to learn. They're willing to find a way to get that documentation. They're willing to listen to us on how do we help and navigate that. So I think character, it's one of those things that although it's not a credit criteria, we like it at the top of our list because I feel like that's the way we can get deals to go through too.
Well, and right now, like Agility, they're basing a lot of the final criteria of whether or not they're going to lend to somebody based on character. Like, hey, this guy, he's got the cash. He's like, maybe he's a little bit short on cash flow. Maybe he's a little bit short on cash up front, or maybe his credit's a little bit lacking because of whatever, but he's got an excellent character. He's got an actual record of having a good character. And so it's a big deal.
Yeah, you'll never see this written in stone anywhere in any bank. But I even remember at First Citizens Bank and some of the older traditional banks, they will speak to this. They'll say, banking is 99% trust, and all those other qualifications of credit, collateral, and cash flow, they're important. But it's that one thing of character, trust, that can bump a deal over the hump, especially on some of the larger deals that go to committee. That's a big deal. I remember I had a deal one time that was it was a beautiful deal. It was a strip center, 100% occupied. It was a crazy structured deal because there was a lot of guarantors on it. They had 5 guarantors and 2 businesses guaranteeing it. So 7 guarantors. It was an insane credit memo to write, but very strong. All these clients had millions of dollars. They were all doctors. I mean, the client that you would want that's perfect based on paper, 100% beautiful client. But one doctor in that group who also had millions of dollars. So her cash flow, her credit, everything was good. She had stolen because she was, what do you call that when you're addicted to stealing? I don't want to use the wrong word.
Kleptomaniac.
Klepto. Okay. I just don't want to say the one where they like dead people. It's
Kleptomaniac.
Well, it's close enough.
Necrophilia.
So she stole an item under $50. That's how important that is. We almost didn't get the deal done. It was only because of the strength of the other lenders, but that was a big deal. We had to literally get her to send paperwork in saying she had gone through all the things that the judge had assigned her, that she had done her volunteer work. I mean, she had to submit a lot of stuff for stealing something that she didn't need to steal for $50 because of credibility. If I'm going to loan you $5-6 million, and you're willing to steal $50, why wouldn't you be willing to steal $6 million? So I just want to speak on that a little more, to how important that is, even though it's never written down. That also goes to a typical problem that me and Mike see a lot, is clients trying to hide things. When we were bankers, we saw it more. When we see it, and we still see it here, even though I always give a speech before I take a client on. I say, hey, good, bad, and ugly, tell me. I work for you. I might not like something you tell me, but I can mitigate that possibly to an extent. We don't do anything illegal around it, but we can find a gray area or a way to pitch it that it makes sense. A divorce, a bankruptcy 5-6 years ago, missed a payment. Some of those things, it's better to know up front than to get to a lender and they're like, hey, yeah, did you see this? And we look like we've got egg on our face. So if you're talking to a consultant like us, we truly work for you. Tell us everything. We don't have to say it to the bank, but we will let them know in a way that makes sense to them and that will be more accepting to them. But always be upfront with the people. I mean, same thing with a realtor. You don't want to sit there with egg on your face when you get all the way at the end. Same thing with commercial lending. Be honest with the professionals you're working with.
That's one of the things that is still, even now it being 2024, something like that, like kleptomania, is still such a faux pas thing and not looked at as a disease. It has a name because it is an actual mental disorder. It is a mental disease where somebody they can't help themselves. It's a control issue. They don't have the control. It's the same as alcoholism. It's the same as being addicted to anything. And when you have somebody, that's a tough thing to talk through. You're talking to a doctor who's got millions of dollars in the bank, right? And they stole something that's $50. And to the average person that's not willing to stop and look at it, break it down and go, there's a problem here. You can literally ruin their chances of bettering themselves even more because of some stupid illness like that. And so that illness speaks to something wrong with them, not to their character.
Yeah. To an extent, yes. Yeah. It's still going to be considered a character flaw or Correct. A trust issue, but I do get your point, and I'm glad you made that statement, just so people understand out there. We're not trying to criticize someone who's a kleptomaniac.
Yeah.
But it can't, the point still stands. It can be a very big issue for something very small if you hide it, because these banks are going to find out. These lenders are going to find out. That's their whole job, is to find if money. They're buying and selling money. That's all they're doing. Mm-hmm. And they don't need to sell money to everybody. They're going to sell it to the people they know that has the best chance of getting.
There's 4 more Alyssas down the street, by the way. There's 4 more.
Well, let's speak more. Let's speak more on Alyssa's deal here. So, what type of business are you looking at? Because industry can play into it.
Yep.
Okay. Really? Okay. So
You're on the spot.
Gosh, I'm big on the screen. Mini storage.
Mini storage
that we've been looking at. Yeah. But I'd love to hear y'all's thoughts on, so that's, one industry, but something we explored in the past that we didn't even get to the financing stage because we found out we were pregnant was like buying a franchise. And so, speak to both of those, because I think could be very different. One, you could buy raw land and build something, and then the other one is buying basically some practices and systems that are already in place, and you have the backing of a big firm.
So don't get me wrong. I want to make sure I clarify and that I have a full understanding as well. So Alyssa, what you're saying is really, you're not looking for mailbox money because you don't want to work for it, but you and your husband both have incredibly busy lives, and you're looking for an investment that requires just a little bit of input with maximum output as much as possible with as little in, right?
Yes, correct.
Hey, Mike, I'll speak to the bank side, and you can speak to the our side of things and how we would.
Yeah.
I was not prepared
Yep.
for this to become a personal.
This is fun. You'll be fine. You'll be fine. This is a great example. This is a great example, and here's why.
Well, but nobody
Banks-
else needs to go buy them. It's already a saturated market. I don't need more competition.
Well, let me ask you this: why did you choose that? What did you hear about investing in a storage? How did you come to the decision of doing that?
Mailbox money. So can be easy to run. You can scale it. It can be as small or potentially as large as you want. And now with systems that they have out there, you don't have to have employees. In our previous business, we had employees. I don't want employees anymore. I don't want to have to deal with their lives because they're typically problems. So it was just the idea of running something that could be easily run. I don't want to say on the side, but while we are also running our family's life, I'm running my real estate business, and Jonathan has his his career as well. But just something that would be an investment and give us some mailbox money.
Great. Those are great reasons why to do that. Now, here's the truth in banking, in the banking world. So you would think, I'll go to Wells Fargo, I'll go to a Chase, I'll go to a Bank of America, I'll go to one of these big banks that are out there.
Other
To be
people may
honest-
think that, yes.
To be honest with you, most of those banks, they want a lot of participatory type businesses. So you would think that they would be very favorable. I mean, RV parks right now are freaking blown up.
Yeah.
But traditional banks are very focused in on manufacturing, healthcare, so doctors, and professions with good equipment, good long-term track records. And unfortunately, some of those are not, even though they're doing very well right now, and they may in the market continue to do well, and banks may change their mind on that. Right now, they would be considered green go, yellow middle, red no. They'd be in the yellow market for if I'm talking with my regional boss about a place like that, or an RV park, or any of those ones that fit kind of in that mold. They are not considered the greatest investment. So it can be a little bit difficult. And then if you don't have the experience in doing it, I would tell you it's going to be really hard with a big bank. Now, on the flip side, where we come in a little bit different, we'll still have the same issues per se, but there's mitigants and other places to go to create something for you, depending on some other metrics. So I'll let Mike go into that. But I would tell you right now, you go to a Bank of America, you go to Wells Fargo, you go to a Chase, that is not, even if you got good cash flow, even if you have good credit, maybe if you had a good relationship with them already long-term in other businesses, and you're just that cream of the crop, they may go for it. But I would tell you, it would actually be really hard per se to get that type of deal done. So I'll leave that over to Mike now, where it comes into our world.
Yeah, and I think that what it comes down to, I think the statistic is like somewhere where like banks turn down 80% of applicants. And yeah, there is a stricter credit criteria, but sometimes some people don't realize that maybe you as a borrower, even if you're fully qualified for a project like that, sometimes you're not knocking on the right door. Banks have their own way of managing their portfolio, and sometimes when they're heavy in self-storage for this example, they might be heavily weighted on a portfolio like that. Maybe they're not looking to take that risk. So you can have the best, collateral experience and everything like that, but if the bank is heavily weighted in that sector, then they're going to, deny your loan. And a bank won't tell you why. They won't say, hey, well, we're heavily weighted in storage, right? They have fair banking laws and things like that they have to abide by. And so sometimes, getting your opportunity to the right bank in the first place is so important. And, our relationships with banks and understanding what their appetite is super important, right? But yeah, kind of going to what Josh was saying, as far as if you're in the right place, right? It's really looking at the overall picture, experience, how much injection you can put into the project. Typically a bank's going to want a nice amount of down payment and things of that nature. Well, what happens if you're a little bit outside of that box, right? What happens to those customers, right? Whereas the bank is very traditional in the fact that they're going to want a down payment, a significant down payment, and in exchange, they're going to fund the difference. Whereas what if there is, in a case, what if injection is limited? Meaning the down payment, the access to the down payment you have, but you really think that this business model is going to really work out for you. I agree with you, Alyssa. I think the self-storage space is a unique space where you don't have to manage a lot of employees, have that residual income come in. So that's great from a managing perspective, right? But if there was a limitation on injection or maybe slightly on credit, things of that nature, how do we become creative with it, right? I think for us, one of the things that we see in self-storage, at least in Las Vegas, these price tags are starting at like 2 million plus, right? And so for someone that's maybe limited in injection, can we structure it a different way where you come in with a portion of injection? Maybe the seller has seller financing, as a possibility. And if those of you that don't know where seller financing is, that's basically where the owner acts like the bank. You structure a portion or all of the debt, and you pay them back in a monthly payment, right? Sometimes you bring in another partner in, right? Maybe you don't have the experience, but you want to look at SBA lending because SBA will have the lowest down payment possible. And if you've got the injection, you got the credit, you got the business you want to go into, but the SBA says, hey, we lack here the experience. Can we bring a partner in and share, 10% ownership, 20% ownership to make that deal happen? So he's really getting to the understanding of, of just how can we put this together, right? Whereas some banks will just kind of look at it from their credit box perspective. And if something doesn't check out, it's really quick to write off. But are we talking about those different perspectives as well? That makes a huge difference. Too many times we've seen when deals come our way and we're like, man, why are you here? Or why couldn't the bank get it done? We're looking at your financials. Everything looks good. It could be a moment of maybe they were in the wrong place in the first place and they just don't know, right? Maybe it could have been that we got to get creative and we got to inject money a certain way, or we got to bring in a partner. Maybe it is the fact that we have minimum guidelines down to the SBA, what they call an SOP. That's the minimum guidelines for the SBA, right? All of that makes a difference, right? And so we can understand that full picture. We can then drive that loan to success. If that makes sense.
So you say drive that loan to success, and I think that's a big deal, especially when it comes to using y'all versus going direct to a bank. One of the reasons, and I don't ever make it a secret when I use a specific lender, the reason why I use that specific lender and why I push them directly. And Wendy Gormley is one of the best, is one of the best examples of that I have. And she uses that exact term. They drive to meet a goal. The deal I'm working on right now, closing is set for the September the 3rd. Probably not going to make it, but she really doesn't want to pull the plug and say, hey, we need to push an extension, because they are driving to meet the goal of the 3rd, even though it's a little bit sooner than they really want. And so, I mean, it's kind of the same thing. You guys remind me a lot of this guy that it's funny. So as a kid growing up, there was a guy that I knew. It was a friend of mine's boyfriend or something like that. And he wanted to be a car sales consultant, and he was making up his own job, more or less. He wanted to work for himself, build relationships with dealerships, build relationships, to be able to help people walk through the process of buying a car, because so many people get screwed over in that market. Y'all pretty much do the same thing, except for it's not a BS job y'all just made up. y'all already had relationships with banks because you came from banking. You already took care of things. You know what banks are looking for. You understand what an appetite is. And so you try to explain all that to a layperson and say, okay, well, we're going to pick a bank. These are the banks. These are what these banks like. These are what their criteria are. And you can actually focus on getting that person to the right place. And so like taking Alyssa and saying, hey, Alyssa, these are the things we need. Obviously, you need your financials for the last 2 years. We're going to need yours and your husband's, anybody else that's going to be involved in the deal, so on and so forth. This is what we're going to need. How much cash do y'all have available? And then after that, okay, cool. Let's get working on seeing what we need to do so we can push you all the way to the start point. Because if you go and you look at race cars, they don't start the race car and drive it to the starting line. They push it to the starting line. And that's really where y'all do. Y'all push everybody to the starting line. And then when it's time to go, they're ready to rock and roll and they go.
I like that example.
Yeah, me too. I was like, I'm going to take that one back.
Go for it. Cheers.
I wanted to make a quick comment too on Alyssa. We had talked about experience. One of the exceptions to experience can also be what you had suggested as an alternative is a franchise. So I wanted to let you know, even though you've heard some negative things about getting a business started and not having the experience, and obviously I don't think you've built 50 storage units yet, but that is an alternative and another way that you can get guided. And also there's intricacies with franchises and banks as well, because they'll have approved vendors and approved franchises. And I think still your deal would be better either in a smaller bank or a non-bank SBA compared to going in on a big bank, a large bank. It's not a large bank deal typically.
Not to mention there's also franchised storage.
There is.
Yeah.
And
it can go a long way for that experience part, because now you've got a business who's literally plugged into building multiple franchises. So they're your guidance, and that can be the metric box checked off for SBA or for a small bank.
So one of the questions I was going to ask you guys about, and to go more in detail, because I could explain it to most of my people, but from a banking standpoint, like me sitting here talking to Alyssa, hey, these are some of the things you need to really focus on. And this is the reason why we always push them to somebody to a bank as quickly as possible. But I can remember when I first started really, really getting into commercial, and I sat down with Chandra, and Chandra's a director of commercial real estate at KW Commercial Clear Lake. And she sat down with me while we were about to go. I was looking at presenting a piece of property to a client of mine. And I was like, wait, hold on. This is an 8 cap, which 8 cap, a capitalization rate of 8% is great for any good deal. But then after I started doing the numbers, I'm like, wait, so this capitalization rate is prior to paying a mortgage and insurance. Like, hold on. So she's got to put 50% down for that 8 cap to actually produce money. And so that's really important. You guys do me a favor, break it down. How do you look at that? And how do you talk to your brand new client that is like, cap rate 8%? What the hell is that?
Yeah, I'll try my best to do it. I think the best way to kind of understand it a little bit more would be, how can we, best position your loan? How can we tell the story, right? It's because it's not cookie cutter, right? It's like when you go get a mortgage loan, it could be somewhat cookie cutter, right? If you hit this, credit criteria, if you have this time of your employment, your chances are you're going to qualify for this kind of mortgage, right? With us, it's not so cookie cutter that way. However, if we can always dial in on positioning the loan the best way possible, we're always going to have a better chance of getting the loan approved one way or another. And so, and I'm thinking about, one of the things I think about is SBA lending, right? It's a government backed loan. And with that, it's definitely not cookie cutter, right? We get offers from one of the deals I'm working on right now would be, different caveats that banks will put into that. Hey, well, we want to collateralize this property. We want you to personal guarantee and collateralize your real estate portfolio. And we become the intermediary, the middle person for that, because sometimes it's not necessary that, that we're going to attach other collateral. So it's kind of, I don't know if it's similar to like the cap rate scenario.
Let me stop you there. So that's one of the things that you said, intermediary. And I think that a better word to use is an advocate. Y'all aren't just, because you are an intermediary, but you don't serve as an intermediary just to get a deal done. You serve as an advocate in an intermediary status for the client.
100%.
I think that's a great point. Yeah.
100%. It's when we worked from the bank, we worked for the bank, right? We did everything typically what the bank wants you to do, generate revenue, and we have certain criteria. And now we work for the customer, right? And that's like that's like a huge difference. And for something that we believe in Kovo Capital, I know Josh talks about this all the time, and I love that he does. And it's because it's true. We work for the customer, right? And so if there's any way that we can position the loan better, we can position the approval better, it's for us to understand that, right? And to drive that home, because really a borrower doesn't know what they don't know, right? Our advice and expertise comes from having over 30 years of experience in lending itself. So, I think that's a huge driving point. Whereas many types of products and loans are out there going to be, heavily weighted on collateral or certain metrics like that, where it's probably unnecessary. And sometimes it is necessary, right? Like if it's a startup business, it's very standard that we're going to need various collaterals and things of that nature, right? Just all depends on the scenario. So although there's not a, cookie cutter kind of guideline, we do a really good job on understanding where the position of the customer is. And then that way we can we want to knock on the right doors, and then to have a higher chance of approval. And then B, we want to be, like you said, an advocate. We want to be inside that deal with you, and kind of going back to the character that we were talking about. I always say too, we can work really hard to get your deal done, but if you're going for a business loan, whether it's a franchise, whether it's a startup or whatever it may be, right? We want to see your entrepreneur spirit into that deal too, right? We want to see you work at those things as well. Although we do a pretty good job on helping with certain things like forms, projections, it's going to take some homework from the borrower's end. And if you can show your entrepreneur spirit with that, we can make pretty much any deal happen, right? And that becomes a good experience on both ends, because sometimes we can get caught up on the littlest things that can make the deal move forward. Does that make sense?
Heck yeah. Alyssa, what else you got? You're starting this business, girl.
Starting this business. I didn't know I was starting.
Free advice
today.
Free advice.
Y'all spoke to about character. I'm just curious what it is that y'all look for, and because you're developing this relationship with these potential borrowers over not that long of a time. So how are y'all going about determining character in a short time frame?
Yeah, at least for me and for any lender, we want to see it. And again, we talked about being responsive, right? Any kind of questions that come up, because we talk about underwriting. We wish it was like a one conversation, submit the application, come back with the approval, and now we're closing and signing, right? But there's a lot of things that go in between that, depending on the deal. There's going to be questions that are going to come up. There's going to be some things that maybe come up on background or credit, and how responsive can we be with that? Also, Josh mentioned, we want to know the good and the bad, if there is any bad or challenges that there could be in that deal. And when we know those things up front, yeah, it avoids a headache at closing later. So, a character is being fully vulnerable like where you're at, where you wanting to go, and disclosing everything to us versus us finding it out later. Nothing is worse than when you're looking at the deal and we even pre-qualify you and we're even go through some of the questions, and then we come back and we say, oh, well, what's this tax lien? We talked about if you had tax liens and you said no, but now we're closing and there's a tax lien that comes up, right? Versus the person that's going to say, hey, you know what? I want this loan. I'm looking at doing this. Oh, and by the way, I got this tax lien. Is that something that we could work with? Because that's the determining factor in whether or not we can work with something like that. I structured a deal for a customer who, it was an SBA deal. He told me about the tax lien. He said he was on a payment plan, things of that nature. So when we got to closing, it was already disclosed, right? And not only that, at the end of the day, the bank did request that we pay that off. Well, this is one of my favorite deals because, when we're going down to that closing table, this person had lots of good things going on with their business, and their character really shone through, who they are, how they've carried themselves, how they carried the business, what they believe in. Well, when we're going down to the closing table and now the bank is, asking him to pay off that tax lien, in this unique situation, we actually got involved. Kovo Capital actually fronted the $50,000 for him.
Wow.
And that way he got down to the closing table. We were able to close his loan. When he got funded, he paid us back. What bank would do that for you?
Yeah.
None.
And you'll go ahead.
And I share that because had he maybe not been as responsive, had he not been transparent or anything of that nature, you think we would have spotted him $50,000? We would have said,
No.
hey, man, we can't get this done. I'm sorry.
It is what it is. The deal's not going to be made for everybody.
Yeah.
So
You'll hear you won't hear it a lot on their side, but between me and Mike and between bankers and whatnot, you'll hear people say red flags. And he had spoken to a couple of them, making sure that you're responsive and whatnot. But you'll also, and this is something a lot of people can even get a little frustrated with and upset. But you'll notice as you go through a process, doesn't matter if you're startup, if you're experienced, doesn't matter what type of deal it is. If it's on the commercial side, you're going to get this. You're going to hear repeated questions. You're going to hear us ask you the question. You're going to hear underwriting ask some of the questions. You're going to hear the lender ask some of the same questions. They do that on purpose because they want to hear consistency. And that's where they're looking again at character and red flags. If they tell us one thing and immediately and this has happened so many times.
Yeah.
And we'll go back because we stop them right at that point. We go, hey, we need to have a conversation, and we get them off with the lender. Because at that point, it can make us look bad because these guys are bringing up something we had no idea on, and they might present it in the wrong way, i.e. a tax lien or something else like that. And so don't be afraid. Don't get frustrated. I've even sometimes told people ahead of time, I'm like, hey, you're going to get asked the same questions multiple times, whether it's a form and a question, you're going to hear the same things. And don't act like, well, you should have just listened to me or you should have looked on the form. It's deliberate that we're doing that. So I wanted to add
just
that
like
in
the
there
way
too.
a cop asks you. A cop asks you the same questions 3 times, 4 different ways. And it's all about making sure you give the same.
It's deliberate. Yep.
Yeah. No, definitely. And that's the importance with that too. And really, banks are always looking at that too. And I think to go along with your character, like if you're listening to this and you're like, well, I don't even know what my character is or whatever it may be, that's okay. I would just say be vulnerable and be open.
Agreed.
And be open.
Though, that's huge.
Well, first is call us.
Yeah.
And then be vulnerable.
There you go.
So we try to do at the end of every interview, Mike, we always try to give somebody the chance. So if you got 15 seconds in an elevator You handed your business card to a business owner. Give me your 15-second elevator pitch. Who are you?
Oh man,
What
you
do
guys
you
putting
do?
me on the spot.
Hell yeah, I am.
He likes to do that today, apparently.
Yeah, man. Yeah, that's good though. I typically will hand out my card and let customers know that we help with business lending and commercial real estate financing, and that we're a little bit different than the way banks work. We have less stringent criteria when it comes to guidelines and things of that nature. We work with speed and efficiency, and that we work for you most importantly.
Love
Amen.
it.
I think you guys
Yeah.
working for.
How long was that?
You're good. You're good. I think that's a big thing is for people to understand that when it comes to Kovo Capital in specific, one of the reasons why I push Kovo outside of Wendy Gormley or going directly to Steve, if it's one of the things that I can send directly to him and I know it's a super easy cut and dried type kind of deal, that's one thing. But if it's anything, I have even the least shred, or if I have a shred of doubt that it's going to be a potential problem, I send them to Kovo Capital. And the reason I send people to Kovo Capital is for one reason. And that is, number one, they don't work for banks. They work for you. And that means that they are not just an intermediary between you and the bank, which is why you have to answer the same questions 15 different times, but they're an advocate. When that bank comes back and says, yeah, but Alyssa does blah, 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 they're going to be like, yeah, because of blah, 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 blah. And they're going to have answers for those questions before it even makes it to you. And then if they can't get that answer, they're going to say, we'll get right back to you. And they're going to go to Alyssa and they're going to say, hey, Alyssa, here's the question that they have. And Alyssa's going to tell them in plain English, this is what I got going on in my life. And then they're going to say, cool, just like a catcher, I'm going to receive that pitch, but I'm going to frame it so that it looks like a strike regardless of what they think. And they're going to be there to advocate for you.
To add to that too, if you go, we've already kind of said this part, that if you go to a bank and they decline you, they're not necessarily going to tell you why. We
Right.
On the other hand, when you come to us, we want you for a long-term customer, and you might not be ready now. You might be ready in the future. And so when we deny you, or we get a bank, enough banks and enough credit unions and enough whoever we're going through to see if we can get you qualified, we are pretty transparent as to telling you, hey, you didn't get qualified based on this. We have a customer I'm thinking of right now with Josh. We can't help him right now. He's a great customer, great guy, character, has some money, has some cash flow. The problem he has is the equipment that he has is just not valued within banking, because when you use it as collateral, a bank's first thought is, what's the worst that can happen? They don't look at you as if, hey man, you're great, you're amazing. They look at you as in, what is the worst case that you could have happen, and how do we recoup money? So in his case, that type of equipment was not, it wasn't able to be easily sold. Yeah. And so even though he has these great assets, $1 million worth of assets, untouchable. So giving him that guidance and letting him know, yeah, we can't help you here, but now if you restructure some of the things, and I gave him a whole bunch of good ideas and where to go and how to do it, then I'm not going to make any money on, and I don't need to make money on it. We're doing right by the customer, and so he's going to be a good referral source for us, or when he's ready and have taken care of those challenges, we will be able to help him in the future. And so that's another big difference too between us and a bank, or us and an SBA, or us and they can't tell you some of those things. We can.
Well, Mike, man, we appreciate you, dude. We really appreciate you, especially being able to pop in such short notice, man.
Yeah, no, thank you guys for having me. And if you're all ever in Vegas, holla at me.
I may be there between the 10th
February?
and 14th of October.
Mike loves hosting people.
That's what I do.
Oh, is that? Oh, okay. Got you. Very cool. So, Mike, I know it's been across, right? Exactly, the big beautiful house.
But you have to be able to play the piano. You have to be able to play the piano.
I got a ton of practice to get to.
So, I mean, it's been ticking across the bottom of our screen off and on through the entire interview. But let's go ahead and run it down. Mike Hernandez, Kovo Capital, 702-623-7336. Super easy. Mike at kovocapital.com. Make sure you put that M at the end. Otherwise, it's .co. And so, man, thanks
Don't
again.
bring
Dude.
up our bad
Yeah.
history.
It's
Thank
great
you
having you,
all.
man.
Appreciate
I'm
y'all, man.
sweating at
Thank
the
you
thought of
all.
it.
Yeah, thank
Brother,
you
man.
guys. And ladies, have a good day.
All right, brother. Have a blessed day, man.
Thanks,
All right.
Mike.
Later.
Talk to you soon, dear.
So listen, I mean, like you and I've had a couple little small conversations, but I mean, like, having that conversation and being able to hear it directly from Mike. And I mean, I know that we're using you as a pawn last second. The whole purpose of throwing you under the bus was because that's how everybody feels. When it comes time to make that decision, people want to be ready. But the problem is they don't know how the hell to get ready.
Yeah.
And it's just like when you and I have talked about it in the past, you're like, well, what do I do? Where do I start? So now that you've gotten to talk on a slightly personal, but also very public forum, what is your feelings on what you've heard?
Oh, that's
What did
a
you
loaded
learn?
question. What did I learn? I mean, something I've always been very passionate about with any friend or family member doing any sort of business or real
Mhm.
estate deal is I always advocate go to a lender first. Like, don't figure
Yeah.
it out and then try to get lending. You have to
Yeah.
figure out lending first before you figure out what you're getting. So I think I may come from a little bit of a different mindset than other people just because I
Agree with that.
am in this industry. And yet, like, it's still good to have everything reiterated once again of, what it is that y'all are looking for. Cause I think
Well, it's a
some,
different chair. You're
yeah,
used to telling people, hey, go see a lender. You're not used to being
Mhm.
told, hey, go talk to the lender.
Yeah.
Right. Like,
And not
and
99% of the problems we run into and the extra expenses that some of these guys get into is they go find this property, this business, this whatever. They
Yeah.
get into an LOI and a contract, and then they try and source funding. And I'm going to tell you right now, it's going to cost you a minimum of $5,000 to $10,000 more. You won't see it. But it will be in that contract based on
Yep.
origination fees or whatever else. That if you wait, because timing too. Hey man, I get this all the time. Yeah, how long do you have to close? I got 30 days.
Whew.
30 days to close. What are you doing?
Yeah.
You're most likely, if you really want that property, gonna end up in a bridge loan. That's
Yeah.
gonna cost you thousands and thousands of dollars right there. It might
Yep.
be a smart play. It's a good tool. I don't want to say there's a bad.
No.
Any of these tools are great tools if you use them the right way. But so many people do not qualify themselves prior to going to go do this stuff. They get this contract going, and granted, they can probably get out, but maybe they put money down. Maybe they've already extended it one time and put another $10,000, $15,000
And that's
down.
hard money. Like you would do an extension.
And
That's hard money. If you're
it's
doing
done.
a contract on one of my properties and you want to do a 30-day or 45-day extension, you better expect that you're going to be paying me an additional $5,000 to $10,000. And when you drop that money off at the title company, my client's going to go pick it up. They're not waiting
Yeah,
for the end of
gone.
the transaction. They're going to go pick up that money right now.
Yeah.
It's hard money.
It's gone. It's
Yep.
gone. So, be prepared. Go and ask the questions, don't wait until part of my speech and JP knows this personally because I've done some lunch and learns at his place. I tell him, I'm like, use me as a qualifier. If you've got a client that's getting ready to do this, don't get them all riled up on a piece of property and then try and get them qualified.
Yeah.
Use me. I'm going to tell you right then and there if this person is going to be a problem or if what they need to work on. I'm going to give you that information. And maybe it's only going to take another 35, 40 more days. But now you know not to put yourself in a situation where time is money and you're crunching time. And now you're just paying money you shouldn't have paid for. That's why you would pay me to save you money. And granted, and believe me, we save people thousands and thousands of dollars to get these deals done by just knowing what we're talking about, putting it in the right place, and making sure that the banks are held accountable or lenders are held accountable for what they're offering. The negotiation part, because if you don't know better, you're just going to go, 7 points underwrite or origination fee. Sure. That's freaking high.
Heck
Yeah.
yeah. Heck yeah.
Yeah.
Or collateral. I want your house, but yet you cash flow. Well, you shouldn't have to put collateral down. You
Correct.
cash flow the deal. We can go back and argue that. So,
So I want to kind of go back to last podcast a little bit real quick. So we are now 11 days in to the new DOJ assessment, where we have new laws here in Texas that differentiate the difference between a buyer commission and a seller commission when it comes to residential purchases. It's important for us to talk about this because a lot of our clients that we're going to be seeing as a podcast group are going to be residential investors. And with that being said, have you been getting any kind of kickback at all, Alyssa? Any questions that you have or haven't been able to answer? Any struggles in the last 11 days?
Nothing I haven't been able to answer. I mean, there's questions just because, our lovely media likes to put things out there. So there's definitely questions, and yet I'm able to explain it, and no one's said they don't understand or gotten, no one's felt that it made any sense. But I had a past client call me the other day, said that they wanted to go look at a house, and his wife had, so to bring it full circle, he's a past client, and yet he used to work for me when we owned our previous business, and he was in high school.
Okay.
So one of the employees that I did not have a problem with has grown into a fantastic young man. And he said, hey, my wife wanted to go look at this house, and she filled out a thing on Zillow for a showing request. So we're going to go look at it. And if it's something we're interested in, I'll let you know. I just didn't want to bother you until we knew if we liked it or not. So I was able to tell him, well, hey, that's great. But if you're not showing, I don't know how Zillow does their showing requests, but if you're not looking with the listing agent and you're looking with just any random agent that Zillow assigns it to, you're going to have to sign a buyer's representation agreement. There's new laws that went into place. And he was like, what? That's ridiculous. That's stupid. I was like, yep. So, what time did you agree to? Cause I'll just meet you there.
Yeah.
Cause first off, I mean, we don't want to, within residential real estate agents that, choose to collaborate. If you have the listing, but there is a buyer's realtor on the other end, like, I don't want to be spending my time showing your buyers the property.
Hell no. No.
So if that was going to be the case, I don't want to say waste his time. It's not a waste if it ends up working out that they like the house and want to buy it.
The biggest deal it's not a waste of his time. He already signed up to look at the house. I think it's the hardest thing to get through to our friends, family, past clients, that our job is to show property.
Yeah.
I don't care whether it's commercial property. I don't care if it's residential property. Our job as real estate agents is to show property. Under no circumstances should you be worried about my feelings to show you property. If I have the time, I'm going to tell you. And obviously I've got other clients, so there's a potential chance that I'm not going to have the time, but I'll never not have the ability to talk to you and walk you through what my time frames are, what your time frames are, and let's make a match.
Yeah.
I mean, honestly, I don't know how Zillow is going to last. Because you can't just hand them out. People can't just show properties anymore.
Yeah. Well, and then fact of the matter was he wasn't sure who he was supposed to meet. He was going to show up at 2:00 yesterday, and nobody had scheduled to show the house at 2:00 yesterday. Because I reached out to the listing agent and I said, hey, I just, here's the situation. Was it did it go to you? Are you the one that was scheduled to show them? And he said, I have no showings for tomorrow.
Wow.
Okay. Well, thankfully my client even called me to give me a heads up, because he would have been there at 2:00 and nobody would have been there.
Yeah. No
except
joke.
the seller, who was working from home. So we couldn't go see it at that time.
So guys, it was a great show. I think it was very informative.
Hey, before we go, this is off topic, but because Alyssa's got her Aggie thing in the background.
Oh, hey, yeah, that's right. We've all got our green screens now.
And we just had the Olympics. Did you guys see the Aggie that won gold? There's probably actually a couple, but I know of one. Did you see that?
So
How
the
do I
universe.
feel
he was
it's gonna be-
well, he was so proud that he won gold that he actually bronzed it.
I knew there was.
But
Who's gonna win? Who's gonna win? UT or A&M this year? Since y'all get to face off again.
We do get to face off again, and I'm not one of those that's going to be like, "Oh well, duh, we're going to win." We have a new coach, and we're gonna. Let me
Toughen
tell you
it out.
after this.
Y'all are good at getting new coaches that don't.
So,
How much are you paying the old coach still?
I think it was
I think
175
it's like 10
million.
Oh, geez.
Wow.
Great investment. So if you go to A&M, don't go take investment classes. They're not good at investments.
Yeah,
You're darkening out there.
There you
Hold
go.
my light.
Nah, I like Aggies. Y'all came up,
Yeah.
so I'm a TCU grad, and y'all had I know you've heard Gig 'em Aggies. That is because of when y'all used to play us
Yes, it
TCU
is.
back in the Southwest Conference.
Yep.
So, good
So
times.
Horn Frogs.
Next
and we were
20
Gig
frogs.
Yep.
That's
I'm just
right.
hoping we survive all the mess of college football now. So
Yeah, no joke.
we're sitting pretty so far, but we'll see.
Well, guys, we appreciate you.
You're
we
just
hope
getting
you-
darker and darker.
We hope
Fading
you
like a
enjoy.
ghost.
We hope you enjoy our incredible darkening green screens that we have got. If you'd like to see some information on the back of our green screens, if you'd like to see different pictures, as you can see, this is all kind of our own personal personalities that are popping out. Minute Maid Park, huge Astros fan, obviously. You got Josh with a picture of downtown from Transco Tower, and obviously the 12th man flag. If you don't know who the 12th man is, then you are definitely not an Aggie fan. And so, love you guys. Glad to see you here watching us again. We're going to start trying to get a little bit more video footage up for you guys more consistently throughout the week of outside of the podcast. So
We've got a lot of exciting things coming.
Yeah, we've got a lot of stuff coming up.
Don't forget to like, subscribe, and follow, and comment. Let us know what you want to see, what you want to hear about.
It really is. It's a big part of the YouTube algorithm. The crazy thing about the YouTube algorithm is it's not good enough for you to watch our show, and which we appreciate. More than anything, just the fact that you show up and watch our show is a huge deal. What stinks about the way YouTube is designed is it's designed around 3 factors, and it's watching, how long you watch, liking, and actually making comments. If you share it, it's an additional bonus, but it's not as important as a like and share. And obviously, we want you to subscribe so that you can see every single one of our episodes. And when you subscribe, if you want to be notified, there's a little bell right next to the subscribe button. You can click on that bell and tell it if you want to be notified every time, which we would hope you'd want to be, or if you just want to be notified, at different levels. So anyhow, that's it for this week. We love you guys again. Thank you so much. Y'all have a blessed one. We'll see y'all next week, 5 a.m. Thursday. Bye.
Peace.